Welcome back, investors. Jake here. It's been a very volatile week in the stock market. In this video, let's try and piece together exactly what happened. And then later in the video, I want to share with you an incredibly risky trade that I made that paid off huge. And when we check in with the market, all of the indexes are up huge. Dow Jones is up 2.5%, S&P up 2.1%, NASDAQ up 1.2%. So why? Why, with all of the scary news going on in the world, is the market up huge today? It was also green yesterday. And the reason why, guys, is the buildup in anticipation to a world event occurring is often more frightening to investors than the actual event. Lots of people, because we've known for weeks that potentially Russia was going to invade Ukraine, lots of investors were selling out of the markets, taking profits, holding off on buying, or potentially shorting the market. And now that the world event has happened, it's a true humanitarian crisis. My heart goes out to the Ukrainian people who are suffering and dying right now as Russian tanks roll through their country. But looking at the fundamentals, what will be the economic impact on U.S. companies? And Ukraine and Russia's economies are very small, and we're not in any way dependent on them. So economic relations between Russia and the United States are going to get a bit frosty, but they weren't really that close to begin with. For Europe, it's a little bit different because they're dependent on Russian energy. But for the United States, the actual impact of this war, aside from being, upsetting, disturbing news every day, it's not going to affect the market that much. So people are using this opportunity to buy the dip. In addition, shorters, people who are shorting on this news, they got to cover. And a big reason why shorters are covering today is because they're scared of good news breaking over the weekend. I'm not saying this is good news, but maybe something similar to this. China state media claims Putin has told Xi he's ready to negotiate with Ukraine's Zelensky. So potentially, I've mentioned this in previous videos, Russia needs this war to be over very fast. They cannot afford for this to become a protracted quagmire or insurgency. The whole country gets destroyed, tens of thousands of people die, they lose thousands of their own soldiers. So what Vladimir Putin needs to do is he needs to take the capital city very fast and then install a puppet government and then have Ukraine's President Zelensky meet down with that puppet president and strike out some kind of deal. I'm sure the deal Putin would offer Zelensky is relinquish control of the military to my hand-picked guy, and you can live comfortably in exile in London or Paris. I personally think, if I was Zelensky, I would not get in a room with the Russians or the Chinese because they're likely to put a bullet in my head. And I think Zelensky, just on what I'm picking up from this guy, is he's digging in. He's ready to fight. He thinks that the world supports their cause, and this is their last chance to be free of Russian rule. If they surrender now, if the Ukrainian people don't fight back, then Russia is never going to relinquish control of their country. Additionally, I just don't think this peace talks is very fair and unbiased when China won't even call Russia's attack on Ukraine an invasion. Obviously, they're strategic allies, so if I was Zelensky, I wouldn't get in a room with Putin or Putin's hand-picked government replacement. Now, for the market, this is a confirmed downtrend, guys. So here's the S&P 500. It peaked at the beginning of January. We created a lower high, and we're now in the process of creating our next lower high. This is just the heartbeat of the market, guys. It either goes up with temporary pullbacks, creating higher highs, higher lows. But this is a clear reversal now. So all of the technical traders see this. Everybody knows this is coming. So we created, this was the new highest low. We created a lower low. This is a confirmed lower low. So what do I see happening over the next month? And what I see happening is over the next 2 weeks, the market's going to recover, maybe even get as high as 4,500 for the S&P. But then anticipation for the third Friday of the month in March, when options contracts expire, the Fed is also meeting that week. So in anticipation to the Fed raising interest rates, I think the market is going to sell off huge. Potentially we could create a new lower low here at 40.50 or even 4,000. But then as soon as, once again, the news happens, people are just going to buy back in. So how long will this downtrend continue? How much will the S&P give up? I think eventually it's going to depend on the earnings reports of America's largest companies. So as long as Apple, Microsoft, Google keep reporting revenue growth and profitability, then the market's fine. Unemployment is low. Yeah, inflation is high. That's kind of a bummer, but inflation causes the market to go up. Inflation is baked into the price of revenue growth and profitability. So I think supply chain issues are resolving themselves, and eventually the market is going to stabilize somewhere. It's not going to keep going down forever and lose 50% of its value, but we just need to start getting into a range of consolidation and let the fundamentals of companies catch up to their share price. Before we get to my account, I just want to share with you guys this news story that Russia's stock market lost a third of its value because it attacked Ukraine. For anybody in Russia who was heavily invested in the market or had their retirement savings, they've got to be pretty upset with Vladimir Putin for doing this. This Russian index ETF lost 19% on the day of the invasion. It's called the VanEck Russia ETF. I don't recommend buying the dip on this one, guys. When we zoom out at their performance, Russia's stock market basically peaked last October, and it's lost 50% of its value over the last 3 or 4 months. When we zoom out, going back a decade, Russia's economy, Russia's stock market has seen virtually no growth over the last 15, 16 years. So, yeah, Russia's got a serious economic problem that's only going to get worse. When we check in with my Schwab accounts, guys, my patience has paid off. Year to date, I'm still down about $6,000 or 10%. But just today, I'm up 3,700 or about 7% in my account. If you didn't see my video yesterday, I highly recommend you go watch it. I released my calls that I sold on Apple and Berkshire. Apple hasn't really gone anywhere today, but Berkshire, I think they report after the bell today, but they're up 24%. So I'm up 3,300 just on this one position today. And if I hadn't released those calls that I sold, then the amount that I'm gaining, I'd basically be losing almost as much by the calls that I sold. It was a debit spread, so I'd be losing a little bit left. But allowing Berkshire to, my long calls to take off, this is what is boosting me so much today. My debit spread position on Google is also doing well. Once again, the price target I need to hit for Google is 2,700. It's at 2,678. I opened this spread when it was basically here, and then in the afternoon yesterday, it took off huge. So how much am I currently up on this position? And you can see with the debit spread, once again, you're losing money on the calls you sold while you're making a little bit more money on the calls that you bought. So the call I bought with a strike of 2,600 is up 4,300. The call that I sold against it is down 3,600. So I'm up about $900. My max gain on this position is about $5,000. The longer I hold it in anticipation for the expiration and the higher Google's share price goes, the more profit I will lock in as remaining extrinsic value is converted to intrinsic value. What else is going on? All right, So, a stock that I almost bought yesterday that I didn't was Microsoft. And I just want to share with you guys this incredible chart here. Look at the size of this green candle. Microsoft was up almost 6% in one day. And Microsoft is a company with a market cap of over $2 trillion. So to go up 5% on a $2 trillion company, that's $100 billion. So $100 billion was purchased or flowed into Microsoft's market cap yesterday. So everyone and their mother yesterday basically bought a little bit of Microsoft. So why? Why would Microsoft do that? And when we go to the charts, I've shown you this chart on TradingView before, and I drew in this vertical slope line that goes all the way back to December of 2018. Briefly fell below it during the COVID crash, but then quickly recovered, and it's still continuing on this slope. So not only was there a very strong line of support here at 280, but as soon as Microsoft on opening bell Thursday touched this slope, it just rocketed. It just took off like crazy. So this is not human beings buying Microsoft, when it's touching the slope. It's trading algorithms, it's computers, it's price targets for people with very sophisticated trading software. So I was looking at Microsoft. I've been staring at it for months, watching it fall down to this slope, watching it get back to this level of support at 280. And as soon as it triggered the 280 and this slope line, all the computers bought it. So is Microsoft now in a new uptrend? And according to the stochastics, it is. So if I was looking to open a new position today, I would buy Microsoft. The problem is how much upside is there? There's a line of resistance here at 310, and it's already basically at 295. I guess that's $15 worth of share price movement. What I think is going to happen is it's going to get to 310, bounce off it, and then go back down to this 280 or this slope line when the market sells off in March. So in anticipation for that, guys, you better believe I am going to get into Microsoft before the third week in March, after it's gone back close to this 285 range. Okay, the last thing we need to cover in this video was this incredibly risky, stupid trade I made yesterday that paid off huge. I'm currently up $5,456 in just one day. This is my Robinhood account. I reset this to 25 grand because I want to do another trading challenge, but I just want to get through this whole Russia-Ukraine thing first to kick this off. But I had this cash sitting in my Robinhood account, and I decided to buy one-day call contracts out of the money. What does that mean? That means that yesterday on Thursday, I bought call contracts that are set to expire today at 4 o'clock. So I need to sell to close these for this profit I've made of $5,400. Let's actually break down the contracts first, and then we can talk about why did I do this. The current value of these contracts, let's break this down here. So my average cost is $2.37 or $237. And I bought 4 of these contracts yesterday. So I paid $1,000 for out of the money one-day call contracts set to expire today. If SPY had gone down just a little bit, these would be worth $0 today. But SPY obviously went up huge. The strike price of these contracts is, where's the strike here? So the strike is 420, and I bought 4 of these call contracts. So every $1 that SPY goes up above 420, I'm making $400. And SPY is currently at 436. So when I bought these contracts, they were below 420. I think it was at 418 or 417. and I've gained almost $20 in share price appreciation in a day. 20 times 400 is basically how much I made on these one-day call contracts set to expire. So here you go. My total return on this position is 597%. But once again, guys, I was set to lose everything if SPY didn't go up today. So I can't encourage this kind of trading. This was incredibly risky. I'm going to sell to close these right now. Okay, I've sold to close and I locked in a profit of $5,491. This is going to pay my rent the next 2 months. Additionally, in my Fidelity account, I actually bought 5 additional call contracts with a strike of 430 on SPY, but these were monthly call contracts. They don't expire until March 18th. I am up 94% on these contracts. The plan, if you're familiar with my dead hand options trading strategy, was wait until the market is extremely oversold. Take a position. If the market goes red an additional day, double up. So if the market had been red today, I would have doubled up and gone to 10 call contracts on SPY, waiting for the bounce. Once again, just looking at the stochastics, we were in the oversold range. I waited for the %K line to turn and get back above the %D. This triggers all of the trading algorithms out there that the market is due for a rebound, a rally, a bounce back, whatever you want to call it. So additionally, last thing I want to say about these Fridays after the market has sold off or had red weeks is shorters just want to cover on Fridays before the weekend. When we look at the sell-off that occurred in January, we have the 24th being a Monday. This was actually a little bit green. The 25th being Tuesday, red. 26 being Wednesday, red. 27 being Thursday, red. And then the 28th, the Friday, the market was huge, green, up 2 or 3%. Once again, all those shorters wanting to cover. So my investing thesis plan here is if we see another big market sell-off and a very red week, Monday, Tuesday, Wednesday, Thursday, then Thursday morning or Thursday afternoon, I'm just going to keep buying one day out of the money call contracts on SPY, just anticipating that on Friday, shorters are going to have to cover, and after a red week, there will be a green Friday. Just an interesting quirk of the market if you think the pattern is actually there. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. If you have any comments or questions, let me know down below. I love hearing from you guys. Till the next video, take care.